Happy Hump Day, everybody. Here we are, day 3 of our coverage of the 2020 financial crisis, now underway, and apparently we are the only media channel that's actually calling it a financial crisis. The rest of the world is busy pretending that there's a coronavirus crisis on. There's no crisis. I mean, if you're not part of the 3%, then perhaps there's not a crisis. Anyways, my good friend and co-host Ed Milewski is here today, and we're going to look at the various elements of the market that are crumbling in the palms of our hand that demonstrate in no uncertain terms that the financial crisis, actually financial crisis 2020 is really misleading. We should call it the resumption of the 2008 financial crisis, because that's really what this is. Like, I mean, come on, the Dow's down 1,300 points now.
Today?
Yeah.
Today? Jesus. Well, and you walk downtown Toronto, and I walked through one of the food courts underneath.
Yes.
And you could have went to any one without waiting. Like it was like
two exits, no waiting, like diarrhea.
Anyway, you know what? This is unprecedented in terms of they're starting to shut down tournaments. They're shutting down conferences.
Yeah.
Look at these. They
should really shut down the Fed.
Well, like for instance, if you have a real penchant for music and you're looking forward to seeing whomever this summer, they've just shattered your dreams.
Well, you know what? Daryl Hall and John Oates are playing at the Budweiser stage. And the Hall & Oates are playing at the Budweiser stage on July 10th.
No.
That's on the schedule. Hasn't yet been canceled. But don't bank on it? Is that what you're saying?
I'd say have plan B in place.
I'm having a barbecue party in my backyard.
Okay, that night?
No. Well, no. Well, maybe. No, maybe instead of that.
Why don't you plan on a big party and then at the last minute cancel it due to the virus and piss everybody off?
We recommended that the PDAC suspend the conference. We were ignored, as we usually are when we say things that actually make perfect sense. And today it was reported that a conference attendee has now tested positive for the virus, implying that there are potentially 23,000 new carriers walking around Toronto, touching, glad handing, and exactly.
Well, I didn't go. Well, I did go, but I didn't go in.
Well, I didn't go either, but some came here from the conference.
Yes.
So when you think about it,
we're all affected.
Well, we could be infected.
Jesus.
I mean, certainly some of us are affected. Some of us are infected. And some of us are just effete.
I was going to say, okay, the WHO, I saw, has now said this is a pandemic. Who? Is that who in a question or who?
Who are you? Who? I really want to know. Yeah. Okay.
All right.
Anyways, we have a disaster.
Look at this is downtown Toronto. Show us
downtown Toronto there in the background. One sec. We'll come back to today's show.
Yeah.
There's how barren the streets are.
Look at those cars. There's three. Yeah. I want a new parking rate. In fact,
is there anybody
calls me up and wants me make their payments, I'm going to say, drop my interest rate.
Drop my interest rate?
Yeah.
Or
F off. Jesus.
Yeah, come and get it. I'll be down at the conference center. No.
Does money really become a factor when you're about to croak? This is the reptile show.
Yeah, it's funny. It's you got to ask yourself now: is the coronavirus a side effect of an excessive population? And really, this is nothing more or less than Mother Nature's attempt to realign the population explosion of one species that is clearly making a mess of things, and trying to just bring it back into some sort of baseline proportionality that more emulates nature. And if that's the case, we should actually be applauding the coronavirus, should we not? For achieving what we cannot, as a theoretically advanced species, accomplish ourselves through just sheer force of will.
Yeah, but that's like the adage. Everybody wants to go to heaven, but no one wants to die. And you can't get to heaven unless you die.
Well, that's all
Conjecture?
Well, it's modern mythology. I don't buy any of it. People who have subscribed to religious beliefs.
So you're saying, like, if you don't have a job,
yes,
we're in a recession. If I don't have a job, it's a depression.
Well, and if nobody has a job, it's a pandemic.
Then it's back to hunters and gatherers.
Hunters and gatherers, or predatory tribal warfare. We can cooperate to achieve a crop, or I can just beat you over the head and take what you got.
As we speak, young fella.
Yes, sir.
The S&P is 14 points away from breaking 2,700, which we've not done yet during live trading hours. So here we are.
2,700.
Here we go. We're starting to show. Yeah, we're 2713, and that puts us down in here. There we go, right in here. That's a new recent low right there. So look.
Okay.
This is how far we've come.
Wow. So interesting.
Very interesting.
Why don't we care? Like, why are we just so unconcerned?
Yeah,
Is it because we sold out of the stock market?
Because we lost
January?
No, we lost our money in the stock market in January.
What's this wee bullshit?
Oh,
I didn't lose any money in January.
No.
I didn't have any to lose.
No, I don't know. I get the feeling, though, that there's a changing here. You know, during the financial crisis of 2008, it was a money problem. Money problem was solved by throwing money at it.
Yeah.
But this seems to be more than a money problem, although this problem is showing us the weakness in the system.
Yes.
Which we were pontificating earlier.
Yes. Yes.
But I get the feeling like people are tired. You know, they're walking around and thinking, let's.
Well, it's amazing to me the range of response to the coronavirus thing.
Right.
Like, so there's us who, like, really, we haven't changed much. We've stopped going to conferences. We've stopped international travel. Would you say that's fair to say?
We haven't stopped going out for sushi.
No, that's what I mean. Our lives have really not changed much, except we've eliminated long distance travel and large crowd association. That's it. But I mean, apart from that, we're doing the same stuff we do every day. I've got you know what? If I want you to see this, I'm going to have to start my NDI. NDI, look at this site I've got up here now. This is the best site for tracking the coronavirus.
Okay, quick facts, 121,000 cases.
Yeah,
okay.
121,844 confirmed cases now. 4,375 have bought the biscuit. 5,657 remain in serious condition.
Bought the biscuit or bought the farm?
Bought the farm. Sold the biscuit.
They've had the biscuit.
Had the biscuit.
And they bought the farm.
And bought the farm.
Okay.
There we go.
Okay.
Thank you. Mixed metaphors.
Okay.
Thank God you're here, Ed.
I'm here.
It's a good thing that you're looking out for me.
Okay.
See, how long on the wagon?
Day 7.
And last night, I was not on the wagon. If you already surpassed me in mental acuity in just 7 days.
Hey, see?
Yeah.
Okay.
I'm gonna have to fast for a month before I'll be that sharp again.
Yeah.
Or else eat a lot of MEO5.
Okay, what about, that's a good informative chart that you just had.
I know,
there.
I could stare at this for hours. Like, look at here's Canada down here. Look, we've got 97 cases total, 39 in British Columbia, 37 in Ontario, 14 in Alberta, Manitoba, none, Saskatchewan, none, Nova Scotia, none. Like, there's where you want to go if the thing goes haywire.
Just let me ask you this question. The yellow number there, it says total serious.
None.
Right?
Yeah.
It says 5657. Are the deceased, are they part of the serious or the serious?
No.
Okay.
Deceased is a little bit more serious than serious.
Okay. So, in other words, kaput.
Deceased.
How about kaput?
Deceased is the step after serious.
I'd like to see that word used a little bit more.
Yeah, actually, they've kind of got the order wrong on this chart. It goes total confirmed cases, then it goes straight to deceased, and then goes to serious.
No. Should
if
be
we
the other
can
way
look at
around.
this chart again, it should say the order should go start with deceased, then go to serious, total recovered, and then put the total confirmed cases at the bottom, because then it doesn't seem like such a big deal.
Total recovered. Total countries infected.
114 out of 195. So there still are, 80 countries that haven't been infected. That's kind of cool. I find it interesting that I would love to see actually a juxtaposition of the percentage of the population in each of these geographic regions, which would be cool. But look at Latin America's a pretty good place to go. Colombia's only got 3.
I wonder if there's anything to do with temperature. Certain climates maybe won't get it.
Well, look at Australia. There's 1, 2, 3, 4 territories with no coronavirus. I've heard that it has a hard time sustaining itself above 8 degrees centigrade.
Above 80 degrees.
Yeah, I can't remember where I read that. That doesn't really seem to make a lot of sense to me. Don't know why I said it. But anyways, yeah.
Big drinkers never get the flu either.
Big drinkers?
Yeah.
Really? Why is that?
I think the alcohol kills everything.
The alcohol kills everything. Huh. That doesn't make a lot of sense to me.
It doesn't make a lot of sense to me.
But, yeah. What else here? Let's see. Why do I have that open? Oh, yeah. So this is the kid who invented that site. Jewish teenager from Israel. This right here on my screen. Hello. Yeah, that guy. He invented that site. Jewish teenager from Seattle.
Really?
Yeah, and that's the site we were just at. COVID2019.live if you want to go check it out. Not a bad little, I like the graphics. The graphics make it easy.
You notice most of the cases are in the middle of the globe there. You don't see them up at the North Pole or the South Pole.
Well, that's true. This is a article you might want to check out. This is at wolfstreet.com. Our good friend Wolf Richter, who might join us today if he gets my email. But this is a friend of his who lives in Italy's orange zone, and he's describing what it's like. So this is at wolfstreet.com, and it's one of the top stories of the day. But I found it really interesting because the aspects that have changed in the orange zone of Italy are not really significant except after 6 p.m. where now everything's closed. So there's no bars or anything open after 6 p.m. And the shopping malls have to stay closed on Saturdays and Sundays. I thought that was interesting. You'll notice on the right part of my screen here that I am being offered large-scale survival portions of meals ready to eat from Good to Go Corp. So they're clearly my computer is overhearing my conversations and thinking that I need to stock up on food rations. So I'm just going to click on one of these, but look at this. Augustin Farms, 1 year, 3-person emergency evacuation food kit supply, 10,000. This is a 1 year survival portions of food ready to eat for 3 people. So you can have this thing delivered on a skid and tuck it into your basement. And if the world ever, blows up, you've got 1 year of provisions.
Right.
For $10,000.
Well, sounds like a lot.
Does sound like a lot. Notice this banner at the top here on this website. Due to increased demand, we are experiencing 4 to 8 week shipping and production delays for new food orders. Do you think there's some people who are reacting with panic?
Yes.
There definitely are, aren't there?
Yeah.
And I'll bet you that most of the people are the people who live out in the boonies where there is no coronavirus. But they're looking at the news and they're thinking, boy, I'm going to stock up on shotgun shells and meals ready to eat.
Meals on wheels.
MREs, as they're affectionately referred to in the Army. In the Army. Okay, but since we are, in fact, still a coronavirus operational outfit, and because we are still interested somewhat in cannabis, I'm still growing 4 plants at home. Ooh, we're going to begin coverage of my live garden probably in another week. I'm about to transform from hydroponic into aeroponic. That'll be interesting.
Really?
Yeah. Here's a look at all of the cannabis indexes now. You'll notice that they are uniformly down again, and so what more is there to say? We'll take a quick look at the names on the large cap index and see if anything really has changed. Weed is down to 1816 again, Cureleaf down to 565, so blood in the streets again, across the cannabis sector again. And so, yeah, I'll bet you that there aren't a lot of people interested in buying cannabis stocks right now. I mean, but I'll bet you at the same token that there are a lot of people interested in buying cannabis. Are you interested in smoking some cannabis after this, Ed?
Yep.
Excellent. I just happen to have a supply.
I know. And I'm going to bet you that supply has been dwindling.
No. That's it?
Well, a little bit.
Oh, that's okay.
No, at the end of the day, look, this is we've got rates at, unbelievable levels.
Yep.
Historical. Oh, Bank of England today,
Yes.
they've cut their rate, emergency cut. It came out of the blue. They dropped their rate from 0.75 to 0.25.
That's interesting. On the same day, they contribute £150 to the IMF's COVID-19 emergency fund.
150 million pounds.
150 million.
Uh,
I mean, it's not a massive number in this day and age of trillions and quadrillions, but I mean, does it make sense that if things are so bad where you got to cut the interest rate that you're contributing to a come what may insurance fund based on, like, how can money solve anybody's problem with the virus? Like, you can't buy Purell at Amazon.com because they're out. No matter how much money you have, they are out of Purell. So
are they?
Yeah, well, in some manifestations, there are other.
You got a big bag of it in there, don't you?
I've got 3 big bags of Purell. You want to buy them? You want to trade? I saw.
No, I don't use the stuff.
In Ireland, a gentleman in the kitchen here was showing me a communication from a guy who was offering 4 bags of or 4 packages of toilet paper plus 2 containers full of Purell. In exchange, he wanted to trade it for a bungalow.
A bungalow?
A bungalow.
Like a house?
Yeah. Apparently, the thing that is being most hoarded now around the world is not surgical masks nor surgical gloves. It's toilet paper. I told you, people are full of shit. and they know it, apparently. No, but this just confuses the hell out of me anyways.
I'm told by someone that's quite tied to the medical bacterial, call him an immunologist. I don't know what to call him.
Doctor.
He says that soap and water is your best defense against bacteria.
Is that right?
Soap and water.
Well, too bad it's a virus and not a bacteria.
What about lube?
Lube. Well, they do have spermicidal lube, don't they? Even though that's cruel.
It sounds like suicidal, but with a sperm.
That's cruel and unusual punishment.
You know what?
Anyways, just cutting quickly to a quick look at the Dow here before we jump to our first guest. The Dow is now down 1,559 points, down 6.23% today. Now starting to approach the level at which it was down on Monday, which was itself record-setting. So this is why, from where we sit, this is the resumption of the financial crisis that was interrupted in 2009 through the fabrication en masse of currency from thin air at the hands of central bankers, an act that will ultimately be reviewed by posterity as misguided, to say the least, temporary in the grand context of the long line of time, and ultimately futile. And what we're seeing now in the markets is a demonstration of the futility of printing money and injecting free credit into the system that is overstimulated with too much credit and too much liquidity. That's the point. Ravi Sood joins me now. He's the chairman of Galani Gold. He makes an excellent case for the ownership of gold as opposed to USD. Ravi Sood joins me now. He's the chairman of Galani Gold. Ravi, welcome back.
Always a pleasure to be here, James.
You bet. Ravi, without any sort of hesitation, I can say that Galani Gold has really become attractive with the rising gold price and your ability to mine gold profitably. Now, I want to talk to you because you've got a sort of a global presence yourself and you operate in many different sectors about the macro picture for gold going forward and why I think we share the same sort of consensus that the outlook for gold is definitely bright, especially in the context of today's lowering interest rates. So on a macro level, what's your take on the future price of gold?
That's a big question, James. What's my take on the future price of gold? I think let's go back to what's the cause or what's the driver for what will be the ultimate value ascribed to gold. And in my mind, that comes down to one thing. There's a lot of confusion, a lot of noise, a lot of catalysts, you could say, about what's moving gold up and down, things like coronavirus or interest rate cuts, noise from the Fed, that sort of stuff. But ultimately, it comes down to what is inescapably a sovereign debt crisis. So the math you can't argue with. There is no way to get escape velocity to get out from under the amount of debt that the developed world has heaped upon itself. And things have not been fixed since the financial crisis. In fact, they've just been painted over, and the ball has been kicked down the road using a toolkit of moves that we've never seen from central banks, from governments around the world. And they've succeeded. And one of the things that's certainly suppressed gold is the fact that the perception has been there as long as equity markets, real estate markets, other markets around the world have continued to be at new highs. Volatility has continued to be low, and it's introduced that sort of high level of complacency. So is there really a sovereign debt crisis? Is there really an issue with the US dollar as the global reserve currency? Well, it doesn't seem like it if the equity markets are taking out new highs every few months and there's very low volatility in capital markets around the world. As that starts to change, and it has, and pick your reason for the catalyst, whether it's been ultimately we're just running out of gas and there's no further response to these policy moves, coronavirus, whether it materializes as a pandemic or not, it's certainly done damage to economies around the world, and there's no escaping that at this point. Pick your catalyst. I don't think it matters, and none of them are really the ultimate driver for what's going to happen to gold or where it's going to be revalued to in dollar terms or in other paper currency terms. It comes down to that sovereign debt crisis, and now what's changed, why is gold moving? We've got those catalysts that are starting to break that narrative that says everything's fine, we can be complacent because equity markets are very high, they keep going up, everything seems to be working fine. We're starting to see the cracks in that, and that narrative's starting to drift down to Main Street again on gold, that maybe there is a serious issue with the US dollar as a reserve currency for the years going forward, and gold needs to be revalued higher and perhaps dramatically higher.
Sure. To what extent do you subscribe to the idea that the 90% of the trading in gold happens in paper representations of gold, and therefore that volume of trade and therefore the low price of gold is not really attributable to the value of gold from the perspective of global supply and demand metrics? Do you think that the fact that gold is traded as an ETF, as futures, as derivatives, is actually causing a distorted price performance and price sort of representation in the marketplace?
100%. And now we've just got in recent years, we've seen more and more information come to light that basically shows that it has been manipulated. In theory, adding all these different derivative products, different ways to trade gold, should add to the liquidity and improve price discovery and more rapidly have the price converge on fair value. That has not been the case. A great, very recent example is if you look at the lesser PGMs, and I'll highlight rhodium. So rhodium, as the physical market, the price of rhodium has soared. The price of palladium has soared. There are not elaborate paper markets on either of those that could easily distort the value. So the physical market is a very good representation of the actual value perceived or otherwise of those commodities. When we saw the huge downdraft in equity markets and hitting all markets, hitting gold, hitting everything last week, the everything goes down kind of scenario.
Right.
Rhodium physical price didn't change at all, but the ETF went down 20%. It completely decoupled from the underlying value of the rhodium that was in theory held or directly attributable to that ETF. That's a great example, a very real and very recent one, of a detachment between a paper value and the actual physical value of the metal. I think the disparity on gold will prove to be much greater. And certainly as a gold producer and somebody active physically producing gold, for whatever reason, and I cannot give you an explanation as to why, all I can tell you is what has happened in the last month or 2 months, we've seen an explosion in terms of inbounds of people chasing us for access to offtakes to gold, which has just not been the case really for us ever, being gold producers for almost 10 years now. Gold's a commodity traded in London. You can buy it, you can sell it all day long. You can pick your ETF, you have all sorts of ways of accessing it, but it's not like it's been that hard to get your hands on gold. So why this huge explosion of interest in getting hands on actual gold? I don't know, but that's, you have to take that seriously as an interesting data point that something has changed.
Interesting. So does this, I mean, Galani Gold is one of the only small, profitable, producing, publicly traded gold mining companies available anywhere in the world. And there really hasn't been an ability on the part of mining entrepreneurs to capitalize development of small producing mines. And that leaves you in a very sort of sweet spot in terms of being able to acquire those types of mines where you've demonstrated expertise. Is that sort of the case that the price of gold being low has created an advantage for Galani?
It has, you know, I'd say not so much just the price of gold being low, but this protracted bear market in gold, and as a result, a protracted and vicious bear market in capital markets for gold and gold juniors has created a huge amount of opportunities for people like us. And why for people like us? Because we directly participate in every dollar increase in the price of gold. Every day of the week we're producing gold. Higher gold price means more cash flow for us. More money that we could redirect to other opportunities, including internal ones, but also potentially acquisitions, new opportunities for growth. Guys who are not directly participating in that gold price day to day, i.e. not producers, we haven't seen their shares move. In fact, they've moved sideways. If you took a basket of 20 gold juniors, decent names, good management teams, you'd find very modest performance over that. Of course, a lot of them are up, but just not anywhere near as much as they should be, really, with what's changed in terms of the underlying gold price and also the prospects for what gold could do in the next couple of years. So I think there's a huge opportunity for companies like us that have the capability of capitalizing on those opportunities. And you know, there is a diseconomy to doing smaller mines. You never want to be doing really small assets. You have the same sort of top-level infrastructure and costs associated to a much larger asset potentially. So you do want to be moving up in the world in larger assets and leveraging your management team and your strengths to bigger opportunities. But I think this cycle is going to look quite different than the last one for junior golds and opportunities and places where people are going to find value creation. The projects that were sitting on the shelf from the 70s and 80s and 90s, they got developed in the 2000s. Going into this cycle, the pipeline, it's much smaller, and the nature of the projects is different. Harder jurisdictions, a lot more underground versus the easy open pit, more complex metallurgy to deal with, and so there'll be opportunities like that for management teams that can execute on those. Huge opportunity right now.
Incredible. All right, Ravi, let's leave it there for now. We'll come back to you in due course. Thank you very much for joining us today.
Thank you, James.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Well, so full disclosure, Galani Gold is a client of the media production division. And so think of that, consider that in the context of advertising. So the Dow Jones at this moment has now reached a low that, well, let's see here. It's now down 1556, 6.2%. What's the prognosis there, Milewski? You think it's going to go below 20?
So it seems to be bouncing back here a bit. I'm just looking at this. It's 23,456. That's a live number.
Okay.
Okay. And I think just a minute ago, didn't it get down to, what was the number we were saying? 24? No.
Yeah. Well, it's broke through 24, you said like an hour ago. Now it's broken through, and it's on its way to below 23. One could argue.
Oh. Okay, now we're back to 23.5.
Yeah.
Yeah, you know what? Yeah, this thing is bouncing around. I think we just dropped. So how much is the Dow down right now?
1,700, call it.
Jesus.
Yeah.
I think we're in a...
financial crisis. Day 3 of the financial crisis of 2020, which is actually the resumption of the financial crisis of 2008. Oh man, you know, it's interesting, it's gratifying, it's sort of a grim victory to have been vindicated after 10 years of essentially screaming from our small corner of the end of the information superhighway we call the internet that, you know, that stimulus and quantitative easing and zero interest rate policy were ultimately only going to be superficial, temporary belayers of the inevitable collapse in the market that was initiated in 2008. For this reason, you know, publicly traded companies in 2008 they're having a hard time. Yes. They're ain't seen nothing yet. Yes. Some of them are not going to make it through this maelstrom. Yes. And what's the upside?
I don't know.
Fewer places to lose your money.
I want to make a point to that. You know, they're always talking about companies that they're going to lose revenue.
Yes.
But they never say it in a positive way and say consumers are saving money. Because every time, you know, someone's revenue is someone's expense.
Well,
so when the airlines are losing revenue, that means the people that were going to spend the money they have more money now to make them feel a little more comfortable.
yes.
So why don't you say it that way? You know, we're back to 23.6.
Okay. So
We were down to 23.3, almost 23.3. So the Dow's now rallied 300 points basically in the last 5 minutes.
no kidding, eh?
Yeah, I don't know what's going on here, but it's even rallying faster now.
Okay, so how about, do you think that there's any chance that the President's Working Group on Financial Markets is stepping in and buying assets? Why don't we look at the volume activity in the S&P ETF? The SPY, I believe it is.
SPY?
Yes.
SPY.
Yes.
Is that like,
It's like,
okay, a spider?
yeah.
Yeah, some action here. Now the market, it's back into, it's back above. Show us with the pen.
Yeah.
So
Make some marks.
make the mark a Zorro here. This is what we just saw this in the last couple minutes.
Okay, so look at the volume indicators down there.
Do I have them up?
Yeah, the volume is the red and the vertical lines at the bottom of your
There
screen.
you go. Yeah. Do I have it up?
Do you have it up? Can you get it up? Is it up? That's what she said.
Yeah, but you know, there's definitely increased volume. But you know, you could argue people when they see bargains, they want to jump in on those bargains.
Yeah, but what kind of?
Yeah, but in Costello?
How do you qualify what's happening? I mean, okay, so let's say that we're going to take another look at the entire value of the S&P, and let's say that we're going to say, okay, well, if the 4.5 trillion on the Fed's balance sheet consists of $4 trillion, which has been fractionally banked out to 8 to 12x, and that is what kind of money has gone into the S&P, the Dow Jones, and NASDAQ, and particularly in the FANG stocks, then what if that all had to be wound back? What if that debt had to be pulled? What if you had to go back to all those public companies and say, well, actually, sorry, we're going to need that money back? Obviously not a realistic premise, but if you look at the chart here of the bounces in the S&P SPDR ETF trust, you'll notice that all of the major reversals intraday are consistent with extraordinary volume spikes in the SPY PDF. So indicating that there's a single buyer in the ETF, SPDR ETF market who always seems to want to buy when the ETF is plunging in value. So in other words, this single large buyer seems to have no qualms about the idea of catching a falling knife. In fact, one might argue that this buyer is in fact there to catch the falling knife.
Really?
Well, this is an extrapolation. This is an opinion.
Yeah.
But
well, look. You don't want, every time the market breaks new lows, it sort of opens the floodgates unless you've got something. Sometimes it's a false move, but certainly they couldn't prevent it from dropping from where it was to where it is.
Right.
Which is, I guess we're now looking at about 600 S&P points. I guess we're down about 19%, right? 20%. And when we were down 20%, they call it a bear market. A correction from 20% of the top that's what CNBC, the talking heads say.
Yeah, well, so we've entered the bear market officially as far as the Dow is concerned.
It looks that way.
Yeah.
Okay.
Yeah. I'm looking at this chart now again. I'm going to put this indicator on the 1 second mark because what we're doing here is tracking in real time. You can see that the orange line is the S&P 500 index, and the bar line is the EFT.
So whenever you hear the word bar, you get a little nervous.
Is the actual ETF. So as you can see, the ETF is being mostly
look at it bounce around.
I know. Well, this is the thing. It's like,
look at this.
So there's a huge amount of algorithmic trading going on here because it's so closely fused to each other. Wouldn't you say?
Look at that.
Yeah. But the interesting thing to me is that the volumes always seem to be higher going to the upside, and the drop-offs tend to be happening with less volume. Now, how could that be?
Well, I don't know. I don't know how you can, I do know this. Oil's at 32.67. How about that?
32.67. Let's talk about that a bit. So now, today, yesterday when after Saudi Arabia decided to cut prices to try to show Russia a thing or two, Russia has now indicated that, hey, we'll play that game.
We'll show you a thing or three.
Yeah. And so Eric Reguly in the Globe and Mail suggests that that it's actually Russia who's in the better position to endure a long-term price war than Saudi Arabia.
Yeah, I guess their debt level to GDP is less than Saudi's.
Well, and you do have to ask yourself about the wisdom of forcing Saudi Arabia to sell oil at a maximum rate. In other words, depleting reserves at a maximum rate at half price. And is the stipulation that Russia, for some reason, can last longer in that kind of low-price environment? Got to say, the Saudis do spend like drunken sailors.
The guy, apparently the new ruler there, the son of the deceased guy, he's got $500 million.
The murdering guy, the murderer, the guy who killed SMB.
SMB, is that what they call him?
I think it's SOB. I know that I'm pretty sure the
SMB,
or son of a dog, actually, is what a lot of people call them there now. But Mohammed MBS.
MBS, that's it.
Yeah, mortgage-backed securities.
Mercedes-Benz. Okay.
Mercedes-Benz.
I want to look at this oil chart here. I want to make a couple comments.
Okay.
We've come off of the $50 level, and here it is. We dropped precipitously.
Precipitously, I love that word.
Yeah, right in here. We bounced off 27.50 up to 35, 36, and now we're coming down here. Usually, important bottoms you need a test. I think we're going to get a test. Look.
So that bottom
who's making more? Who's making money in the oil patch at $30 oil? Not
who's
many
making
people.
Money in the oil patch at $30 oil at $30 oil? Who's making money in the oil patch at $30 oil? $30 oil. I don't think anybody is, except Saudi Arabia.
Saudi Arabia
is making money, but they spend money at like such a furious rate.
Well, they need to support the habit of their ruling family,
who are uniformly coke freaks, as everybody knows.
Are they?
Oh yeah. Are you kidding?
They love the stuff, eh?
Oh, they snort it off of each other's rumps, camels. They do. It's quite the sight.
Camel dung.
Camel rump blow. Give me one of those camel rump lines, will you? And then let's kill a couple of journalists, shall we? We have a gentleman in the house. He's actually not in the house. But this guy is going to replace 150,000 heavy-duty trucks operating in Inner Mongolia in the mining space with electric vehicles. Dr. Bruno Wu joins us now from New York. Dr. Bruno Wu joins me now. He's the chairman of Ideanomics Inc., trading on NASDAQ under the symbol IDEX. Dr. Wu, thank you for joining me today.
Thank you. Good to be with you.
Excellent. Could we please start with an overview of the business of Ideanomics, please?
Well, Ideanomics is a company that we took over about less than 2 years ago, and we've been working very hard on the conversion of it into two parts of the business. Number one is a commercial EV, commercial electronic vehicle ecosystem builder. And second is we have innovation technology investment. Innovation including fintech, AI, blockchain, new medical devices, a bunch of things. So there are two parts of the company.
Okay, and your focus on the electric car infrastructure and economy is of tantamount interest to me. I recently ordered a Tesla truck, so I'm going to be very interested in what you're doing. Tell me, what is the driver of revenue?
Well, the driver of the revenue, we always will have the vehicle sales revenue, the financing revenue that goes along with the sales, the financing advisory revenue. On top of that, we're really looking at the continuing recurring energy sales revenue on the secure clients. So in other words, we are GM, if you want, in the short term, but in the long term wise, we like to be ExxonMobil. So the whole ecosystem.
I see. And so you're recently opened a 10,000 square foot facility in Qingdao. What kind of penetration do electric vehicles have in the Chinese market at this point?
Well, we're actually opening up a million square feet. 100,000 square meters. So it's a million square feet.
I see. Sorry, I misread that.
Much bigger than
Right.
what you just said. The Chinese EV overall, the market occupation rate, the market rate is going up. It's going up more rapidly. But we focus in the commercial EV area because we believe that for all the passengers to switch to EV, we're still looking at up to 7 years apart for the majority of the vehicles, passenger vehicles, to be EV, because there are a lot of stuff supporting infrastructure will have to come with it, and a lot of the functionalities will have to improve, the battery duration and all that stuff. But with commercial EV, particularly with heavy-duty truck and buses and logistic vehicles and even taxis, there is a economic incentive for the driver to change to EV because they cut their energy cost by a overwhelming majority. In the case of a commercial truck, a heavy-duty truck, for example. So we focus on commercial vehicles into 4 different kinds of vehicles, which is, again, heavy-duty truck, logistic vehicles, buses, and taxis. We see the percentage of that going up very, very quickly. Taking China, for example, if you take mining as a case, use case scenario, what we're doing in Mongolia has 125,000 mining-related heavy-duty trucks. 85,000 of them are actually short-distance trucks, and a lot of them are off-the-road vehicles that they just work on a mining field, no license plates required. If you cut it down, if you convert just the 85,000 into EV, 5 years, 150 billion RMB saving in fuel cost. 150 billion in 5 years. So
Wow.
it's quite it's quite astonishing. So that's why we're working with the government there to completely execute that transformation. Not only this will save fuel costs, save operating costs, it will also cut down pollution. So in China and in mostly Southeast Asian countries as well, because their resource, their energy poor, big producers of energy, and energy costs are going up. So they're spending, in China in particular, the government puts on mandate to convert, like in the Mongolia, heavy duty trucks. And in most of the Chinese cities, the buses are being converted very rapidly into EV buses, and it's mandatory.
So are the economic incentives, besides the economic incentives associated for the owners of these vehicles, is the government subsidizing the adoption of the electric heavy-duty trucks in an effort to combat the air quality issues in China?
Yes. Sorry. Yes. The government has been subsidizing for the past few years. But the biggest hurdle is not the government subsidizing. The biggest hurdle is when you're talking about large fleet replacement. Okay, in the Mongolia, for example, you're talking about 85,000 vehicles to be replaced within 2 to 3 years window. You need a huge fleet financing being arranged. That's priority number one, because before the fleet financing is put in place, you will not be able to replace 85,000 trucks. You will not even be able to replace 10,000 trucks. That's because mostly the banks provide financing because and the leasing financing company provide financing, but there's a limit to it. There's no blue book value, no residual value, historical value on EV, so they don't know how to manage risk. So every time it's one financing at a time. So now we need the umbrella financing for the fleet purchase. So that's what we're working on, province by province, electrification fund that we're working with the government on putting together.
I see. As a NASDAQ traded company, are you trying to access North American capital to participate in this financing?
No. We have our financing pretty much sorted out in China with the insurance companies. So the way we do it is, we designed a very nice architecture that creates a win-win-win for everybody. So basically, we go to a local government with AAA or more in the credit rating, a very sound, financially sound government, and we'll say to them, we'll say to the Government Investment Corporation, which has the AAA rating or more, we say, how about we raise fund for you from the insurance companies to do this, but we use your credit rating, use your government credit to guarantee the repayment of principal. Because of the fact that the insurance companies can offer loans at much cheaper price than the normal banks and other financial institutions, it becomes very attractive to the local government. So that's how we're putting the big, ex-bank, not non-bank, non-other regular lending institution, but we're putting together electrification funds. So sort of us, government and insurance company, tri-party partnership. And we're doing we're making very good progress on that. So
Excellent.
Once you have funding in place, then because we don't lack big ticket of orders, the issue is how do you put financing in place. Once that's done, the sales number will absolutely skyrocket.
Okay, and so specifically, how does Ideanomics capture revenue from that whole process?
Well, first of all, Ideanomics is very much focused on signing umbrella agreements to lock up, to dominate certain market sectors. For example, heavy-duty truck. So not only we're signing with Inner Mongolia, we're actually signing with all China's top 6 mining provinces. So heavy-duty truck works very well for mining, for port, for steel mills, these are the perfect scenarios. So we're signing mines, we're signing ports, and we're signing province by province. So in that case, we also formed a partnership with CATL, which is the world's largest battery company. So we sort of become CATL's marketing and sales company. So CATL then we signed with 4 or 5 leading manufacturers ourselves on volume discount. But now with CATL, we're reaching to over 20 major manufacturers on top of the 4 or 5 we signed ourselves. So now we have volume discount. Now we have also the leasing, financing, and operation company forming alliance with us. So our revenue coming from, number one, very large number of sales, and there's a very nice spread because we take out all the middlemen. Mm-hmm. Number 2 is we arrange the financing. So on the managing the fund, we have a management fee, and the financing we take approximately 1% to 2% from the recurring financing, and we further have ABS, asset-backed securitization type of opportunities with the leasing financing companies. But most importantly is now we have secured very large clientele. For example, if we dominate Inner Mongolia in the trucking space, then these trucks need to be charged. So we make a deal with the energy company, power company, to take a cut in the power sales, offer a discount. So it is once the sale starts, we get revenue left and right. Mm-hmm. The same situation holds true with the umbrella agreement with the Chinese tourism, automobile, and vessel association, which regulates all the tour buses. You know that China has about 800 intercity and tour buses, 800,000, sorry. And which is, if you look at the whole size of the Chinese market per se, we're looking at a 4.7 to 4.8 trillion heavy-duty truck market, which is the biggest. We're looking at a 3.6 to 3.7 trillion logistic vehicle in the city logistic vehicle market. We're looking at a 1.8 trillion bus market, and we're looking at a 1.1 trillion taxi and rideshare market. We're certainly attacking all 4 of them, but with a very strong focus with bus and a truck to begin with.
Okay, Dr. Wu, we're going to have to leave it there for now. It sounds like a fascinating business. We look forward to following you with interest, and we'll have you back soon. Thank you very much for joining me today.
Thank you so much. Good to be with you.
Interesting, but gold has really not performed. It really hasn't had a reaction.
It's holding.
Yeah.
But gold stocks, as judged by the Nugget, which is a 3-levered on the GDX bullish, it's fallen out of bed today. It's down from about $25 to $20. Mm-hmm. And the Dust, which is the bear case,
Triple X bear,
is up from about $5.90 to over $7. That's $1 on. That's a big move. So the gold stocks en masse get nailed. Interest rates up slightly, oil down slightly, stock market pounded. A guy could be kicked off the wagon pretty easily in this scenario.
Are you suggesting that
I need a stiff one?
Yeah, you need a stiff one, do you? Oh, I thought you wanted a drink. Jesus.
Jeez, sorry, Jesus.
Yeah. Okay, so this is, in fact, day 3 of the financial crisis. So what is going to happen in this financial crisis? That's what
We want you to know that we're going to be here to tell you.
we are going to be here for you. And we are going to tell you what's going on.
Like Trudeau said today, the balance sheet of Canada is strong. We'll look after you.
I don't think we're going to align ourselves with the young Prime Minister today.
The youngster?
Yeah, no, there's no need to do that. I just wanted to acknowledge some of the people in our chat group, most of whom I've never seen here before, but that's interesting. All right, so everybody's still in our chat group is still talking about cannabis. So obviously the algorithm has not adjusted to the fact that we're covering the financial crisis. Why? Because Google is one of the guilty parties when it comes to projecting this idea that there is no financial crisis and that the bank is doing everything that it should do and that the world is fine. And so this is one of the problems with a monopoly on information transmission. And this is why the one thing that Elizabeth Warren was saying that I do agree with is Google should certainly be broken up and it should have the hell regulated out of it because it has created monopolies in advertising and information distribution that make use of the public airwaves and the public bandwidths to do so at no cost to them. So this idea that it's their business, they can do what they want is kind of malarkey. I mean, if I set up a Kool-Aid stand on the street and sell to passing motorists, I should pay tax because I wouldn't be on a street with passing motorists unless there was a government receiving tax revenue to build streets.
Right.
So just like that is not the case for Google, who enjoys a relative tax-free monopoly with all the money they just file offshore. Anyways, what's my point? Is that this is the 3rd day of the financial crisis, and days 4, 5, 6, and 7, I'm expecting capitulation to occur around day 20, and that is where I believe we will see the Dow head down below 20, perhaps as low as 1514.
Another thing I wanted to bring up, James, is that because they're saying things are maybe not as slowing down a bit in China, so it started in China, it's moved to all these countries.
The coronavirus.
Yeah. So now we're back over here. Does that mean in a few weeks we can see it slowing down over here? Because it's picking up speed over here.
Yeah, but I think again, where's that COVID chart? COVID live, where'd it go? 19 live. Here it is, World IP Review. Oh, that's not it. Okay, I have to go back to my... Oh, this is so tedious. Where is Frank's email? Frank, where'd you go? Okay, well... Frank Candido, here we go. This is the site I wanted to show you. So, here's the thing. The site, NCOV 2019 Live. Canada, okay? Total of 97 confirmed cases. Now, the question is, what was the first day that we saw a first case of coronavirus in Canada?
What day was it?
Yeah, how many days ago? The first coronavirus.
I think about 3 weeks ago, wasn't it? No.
3 weeks ago? Okay, so when was the first coronavirus case in China? It was back in December, right?
Yes.
So from December till mid-March, would you say it peaked at the beginning of March in China? I think that's roughly a safe assessment.
Yes.
And now it's in decline. So if the ratios are the same, then you would say that almost Canada is going to peak at 2,000 cases. So, I mean, I don't know why, but in Canada, I guess we're not subject to, I don't know why, but for one thing, people who are going to the hospital and being diagnosed with the disease are being sent home rather than being isolated, and they're being asked to self-isolate, but they're not being quarantined like they are in other countries.
Yeah.
So, I don't know.
You know what? A Shakespeare play comes to mind. Much ado about nothing.
What you do about nothing. Anyways, join us tomorrow for day 4 of the 2020 financial meltdown that will guaranteed be still in progress.
We're going to be here no matter.
We'll be here.
I'm going to get tested tonight.
I'm going to get tested. I'm tested moment by moment.
You test me.
Thank you for watching. We'll see you all tomorrow.
Okay.